You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
As far as the gold stocks are concerned, they've now become the best value in the marketplace again.
I'm Bill Powers. Thanks for tuning in to Mining Stock Education. And today we're doing our monthly check-in with Dr. David Erfle of the Junior Miner Junkie. I decided I would bestow upon him an honorary doctorate via the Mining Stock Education podcast. So David, welcome to the show. And what do you think about your new degree?
Thanks a lot, Bill. That's springing something on me that's not even close to being deserved. But thank you very much. And I appreciate it. And I always love talking to you and your audience.
Well, it is deserved. And one of the things that I like about your story is that you taught yourself how to do this. You didn't go to college and don't have a finance degree, but you basically taught everything you know in terms of macroeconomics, studying the charts, learning what to look for in a junior miner. And so I think that story is inspirational to those that want to succeed in this sector. And over the past week, I've been monitoring sentiment in the gold sector and the junior gold stocks via the comments that come in through the YouTube channel. And over the past week, I've noticed an uptick in mocking comments towards the gold bulls. So as gold has corrected here, Dave, is there any truth to these mocking comments for those of us that still think gold's going to go higher?
Oh yeah, it's always a great contrary indicator. That's what's great about writing an article every week. You know it's getting close to a bottom when the troll comments really start to pick up. And I got a few doozies last week. Why do you invest in this sector? It's always manipulated, blah, blah, blah. Well, I'm sorry, everything's manipulated. The Federal Reserve manipulates everything. So, when you say everything's manipulated, you're right. When you say the gold market's manipulated, you are correct. But if you're using the manipulation theme to blame your losses on, that's not correct either, because it's everything. The Mr. Market is always telling you something, and if you learn to read the language of Mr. Market correctly, you can avoid the pitfalls, and you could do well in any sector.
There's a trader that I talk to frequently on the show, Nick Santiago, and months ago, he was talking about $1,700 gold was his re-entry point, just from a trader's perspective. And at the time, I thought, no, but it looks like he might be right. What are your thoughts about a near-term bottom here?
Well, if all you need to do, Bill, is just take a step back here, and it's always great to take a step back when we're having corrections like this, and look at the big picture. In a nutshell, if you look at the big picture of the gold price, it bottomed at 1045 on the first few weeks of January, second week of January of 2016. And the price literally doubled by the middle of last year at 2089. That's a double. So a natural Fibonacci retracement level at 0.382 is 1690. So that's the magnet right now that gold is going towards. Just this morning, just last week, we had a strong strong support level broken in that 1765. A lot of people expected to see a double bottom there. It was shaping up to where maybe that was going to take place. Well, as soon as it was lost and there was a stop run, then we had on Friday the gold price move towards that Fibonacci retracement level. Well, it became really oversold, so it's bouncing first. This morning, it bounced back up and it back tested that 1765 area this morning. And it's reversed really quickly and it's selling back down again. So I wouldn't be surprised to see Nick's number of 1700, probably maybe even 1680, 1690, because gold loves to overshoot, to be hit probably this week. So watch out for that. And but it's really interesting how the shares are reacting to all of this. If I could elaborate further on the shares, if you take a look at the GDX, it's been in a bullish falling wedge ever since it ran up like 140% in less than 5 months, right? It's in a bullish falling wedge. It's corrected about 30% down to a support level, which used to be a resistance level for 7 years, which was the $30 area. Okay, it's testing that right now, which was formerly strong resistance, is now strong support. It's testing that area as the gold price is going down and trying to test that Fibonacci retracement level. But the GDXJ went up 180%, and it's been showing relative strength to the miners during this whole time, which is not usual. Usually you see the higher risk juniors, they're going to be sold more and they're going to sell down more during corrections. Well, that hasn't been the case. And the reason being is because the capital markets remained extremely accommodative during this whole correction. I mean, you're seeing private placements, more and more private placements, more frequent, and as soon as they're announced, many times upsized the day they're announced. So capital keeps flowing into this sector. So, and also, you take a look at the SILJ, which is representative of the silver juniors. They're showing relative strength not only to silver, but the silver miner, to the gold miners as well. What you're seeing during this correction is really interesting. You're seeing there's three major gold miners that make up 28% of the GDX index, which is a $13 billion index. 28% is taken up by Newmont, Franco-Nevada, and Barrick. Newmont is the largest gold producer in the world. Franco-Nevada is the biggest royalty company, and it's been in a bear market ever since gold even topped in 2011. It's been in a bull market. So these three stocks are weighing heavily on the miners, and they're all three, especially Barrick and Franco-Nevada, they're at very oversold levels, and they're about to bounce really soon. So I think all this will take place around that 1690, 1700 area. That's what the market is telling us right now.
And should we look for a capitulation bottom and then like a short covering?
That's very possible. That's very possible. I wouldn't put that out because this sector, David Morgan is coined a great phrase. He's silver guru David Morgan, friend of mine and friend of everybody in this sector. The sector will either wear you out or scare you out. Well, this correction has been wearing people out now for 7 months. And could we get a scare you out V bottom at the end of this wear you out 7-month correction? Absolutely. This could happen, yes. So I would look for the 26 area on the GDX to possibly be hit, but if that takes place really soon, it would be extremely oversold, and I would expect a strong, possibly intraday reversal from that level, and that would be it.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million-ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well-positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
Where's the best value then in the junior gold stocks or silver stocks right now? What has maybe sold off more relative to his peers that pose a better value on a relative basis?
Well, the funny thing is these royalty companies are value plays now. The ones that took off first, that took off the most, were doing really well before the juniors started to take off. But, I'm of the ilk that I don't invest in any junior unless I see the potential for a 3 times gain within 12 to 18 months. I won't touch it unless I see that. I'm seeing that right now all over the place in the junior sector, in companies that are de-risking, not high margin projects in safe jurisdiction that are cashed up. They got access to capital. One today that I'm invested in just came out and showed a 275% increase in their resource. The stock was already cheap. The stock popped, and then it sold off that pop. So that stock now is even more of an undervalued play right now. So you're seeing a lot of this right now in the companies that are either near-term takeover candidates or they're close to being that once they put out a feasibility study. So you're seeing a lot of value there. Stocks that are susceptible to more of a sell-off, to where like it would be more of a V-shaped bottom, are companies that are optionality, that need a higher gold price than some of these other companies are using for their projects, and drill plays, even if they're cashed up. Because we saw what happened last March at this time. We saw the juniors led this decline because everything was being sold with abandon that did not throw off cash flow, that consumed capital, and that's the junior sector. All they just consume capital. But this time, this March, they're cashed up. Last March, they weren't, and nobody knew what the heck was going to happen after all these economies were locked down. It was an unprecedented black swan event. But now what's happening with this sector correction is all these juniors are cashed up. The management teams, and moreover, a lot of them cashed up over 4 months ago. So their private placement shares have already become free trading. If you take a look at the GDXJ, which doesn't represent the juniors, it represents basically mid-tiers. It's not even close to its June bottom, where GDX has already hit it. GDX has hit its June low. GDXJ is about $4 or $5 from its June low. So they're showing relative strength. And like I said, juniors in my portfolio and the ones that I follow, many of them have bottomed already, and they've been showing relative strength during this correction. Sorry for that long-winded answer. But.
No, thank you for that thorough answer. I spoke with Michael Oliver, who's great at momentum structural analysis, about a week ago, and he expects for the general equities there to be a topping and like a stealth stair-stepping dropping, to where it's not going to create the fear or the panic the way the popping of a bubble would. Mm-hmm. And then the Fed will inject liquidity, which will send gold higher. So he sees gold and gold stocks going higher as the general market slowly and stealthily goes lower. Could you see that scenario playing out?
Absolutely. I agree with Michael 100%. I've learned a lot from him, and I follow his work as well. And I agree. I don't agree with everything he says, but that scenario I do agree with. The louder the choruses become for the stock market having a crash, the less likely it will to happen. It was ripe for a sharp sell-off after last Friday. And look what happened today. The Dow's up 600 points. So weakness continues to be bought in equities. And as far as the gold stocks are concerned, they've now become the best value in the marketplace again.
Wow. The gold stocks are the best value in the marketplace. I've heard you say that before, but again, they've become that.
They've become that again. Yeah. Uh-huh. Last summer, a lot of these juniors went up 3, 4, 10-fold. They were on fire. And now if you just came into this sector, recently, you understand that once that happens, you got to take some off the table. You got to be selling. You got to be taking some of those profits. You got to, in this sector, even more than any other sector, you really have to reverse your emotions. You buy the fishing lines and you sell the rhino horns, not the other way around. Because this sector can make you humble very quickly.
Yep. Well, Dave, as we conclude, PDAC is coming up, and it's a virtual PDAC. And for those that don't know, it's the biggest mining conference in the world, usually the first week of March in Toronto. It's virtual this year. What's the significance of PDAC this year, do you think?
Yeah, we didn't even have a chance to talk about the PDAC curse.
No, it came before the conference.
Usually, we have the PDAC curse, where everybody flies into PDAC. They shoot their wad with all their news releases. They get everybody bulled up, and then after PDAC, we usually have a nice healthy correction. Well, last year it's shaping up. It's shaping up this year, kind of what happened last year. The selling started into PDAC, and it continued, and it's happened again this year, even though the conference is virtual. But this is just an incredible opportunity, Bill. It's it's funny. I've been in this sector now for 18 years, and it never fails. It's true. The only thing When things go on sale, it's stocks that people don't want to buy. Anything else that has a sale, you go buy it.
You're channeling Rick Rule now, Dave.
It's a concern. It is. It's true. I know it's a Rick Ruleism, and it's true. And I'll cart out my favorite Rick Ruleism. Either you're a contrarian or you're a victim in this sector. It's absolutely true. And like you said at the beginning of the broadcast here, I learned in this sector, by investing and losing my capital, and learned from those mistakes. I've lost a lot of money in this sector. I have, but I've made a lot more money since I've learned the lessons from the money that I lost early on. And because when I first got into this sector, at the time I thought I was a rock star. I confused a bull market with brains, basically. Hey, another Rick Ruleism. And it's absolutely true. And I look back on it and I went, wow, what was I thinking? Selling my house and putting it all into gold stocks back then. What was I thinking? I didn't know what I was doing. Would I do it again? Yes, I would do it again. But now that I know what I'm doing, I'm a lot more confident in making money in this sector. And I think I've proven that. My service is doing really well. I get emails all the time from people that I'm teaching people how to make money in this sector. And that's what it's all about. We're all in it together. We're all in it to make money in this just fascinating sector. It's just fascinating the way it operates. It operates like no other sector on earth. And it's an incredible education every single day I turn on the computer.
Well, I'm going to end with a Rick Ruleism also. If past is prologue, Dave, you're going to be successful again.
Thank you, Bill. I hope all of us are, especially your listeners here, because I know how frustrating this sector can be, and they know it too. If they've just recently gotten into it, they're finding that out right now.
Yep. Well, David's website is juniorminerjunkie.com, junkie with Y. There is a link in the show description. Go check it out if you're not familiar with Dave's newsletter or work. Thanks for coming on today's show, Dave. We'll be touching base in another month.
Look forward to it, Bill. Thank you.